Okay, we are live. I want to say hello to everybody. Welcome. We're just past the hour. It's 11 o'clock here on the West Coast. I am Jamie Parrott, Vice President and Chief Operating Officer of Webinar Series. And I guess I want to start by saying 2020 was a very interesting year, of course, for everybody, not just personally, but of course, professionally. And we certainly noticed some significant changes to the aesthetic medical industry, not only to business operations, but to patient economics, to patient demand and typical patient behavior, as I'm sure you all have seen. And as the average patient's financial situation has changed, we found that their ability to pay for elective treatments has changed as well. So one might assume that we would have seen a sharp decrease in the demand for aesthetic treatments. Fortunately, that wasn't the case. I think very early on when practices were forced to close down, of course, we did see that dip that we all anticipated. But later on, and certainly right now, it's exciting to see that so many practices have really recovered. And there's a major increase in demand for elective treatments. And I know you all have heard this. We've certainly read the articles. But what we've seen personally is that I think patients, after spending dozens of hours on Zoom calls, seeing their face on camera, the time spent at home instead of on their expensive vacations that they might have had planned last year. And of course, with the introduction of remote environments, we saw sort of a renewed excitement in the aesthetic space and for elective procedures, and especially in plastic surgery. So this has been a really good thing, I think, recently for many aesthetic practices. But it also means for many patients that they're probably going to be looking for new ways to pay for those treatments as they continue to get them in the future. So to give you an overview of the changes that have occurred, both economically and behaviorally to patients in the aesthetic medical space, we've invited our partners at CareCap Plus here today to join us. I would like to welcome Jim Giordano, the CEO, and Betsy, the COO, of CareCap Plus here with us today.
Hi.
So welcome to both. Thank you for joining us. To give you a little background on Jim and Betsy, Jim Giordano, he is the CEO of CareCap Plus, and he's been involved in the financial industry his entire career. He got his start on Wall Street, and he's now renowned as an entrepreneurial, especially when it comes to generating revenue and collections. So that's a little bit about Jim. Betsy is the Chief Operating Officer and partner at CareCap Plus. She spent the last 15 years shaking up business processes in both established and startup organizations, and she prides herself in maximizing technology to pave the way for people power. So again, thank you for joining us. Today, Jim and Betsy are going to be going over financial trends from 2020 to 2021. They're also going to be explaining how, as a medical business, you can capture additional patients while providing financial security to both you and your patients through the creation of some unique new payment opportunities. And before we dive into our presentation today, for those of you that have attended in the past, you'll probably notice that our webinar platform is a little bit different. We did just switch over to a new webinar platform. So totally aside, please give me feedback if you enjoyed the presentation or if there was something on your end that you didn't like about it. But I think the first rule of house is that everyone is muted and your videos are turned off to speakers today and to focus on the presentation. But if you have a question, we do encourage you to type that in the chat box in your webinar dashboard. You can type it in at any time. We will get to it at the end of the presentation, and we'd love to see those questions. Second would be that we're going to be conducting a couple of polls today. So again, we'd love to have your participation in the polls. And to do that, you'll find those polls on the dashboard. They're pretty visible. Once we put those polls live, you will see the questions. And then finally, our guests have been kind enough to provide a copy of today's presentation in the handout section of the webinar dashboard. So that is available for you to download at any time during today's presentation, before, during, or after. And we encourage you to do that as well. And with that said, I would like to introduce Betsy and Jim Giordano of CareCap Plus.
Thank you, Jamie.
Thank you.
Appreciate that. Thank you all for attending, and for those of you who will be listening to the recording, thank you for your time as well. I'm going to summarize what CareCap is and our purpose in one sentence. We are a financial technology company that enables you to attract a greater population of patients to your practice by expanding your market share through an innovative payment model. And we'll be sharing today, I think, some very insightful consumer credit trends in your market that's going to have a profound impact on your business going forward. Let's get to it.
All right, let's have a poll here, I think. We have a question, so we know.
Okay.
I think we have our first poll, right, Jamie? I don't know how to do that. Here we go.
Yep, it should be published. And for those of you who want to participate, that is on the your dashboard. Should have popped up.
Okay. All right. Really high level participation. Thanks, guys. All right, well, we'll move on. We'll assume that it's a 50-50, okay? All right, awesome. All right, oh, here we go. 100%, yes, offer payment plans. Okay, good to know. Thank you. All right, here we go. We'll turn off the video so you guys can focus on the slides here. Here we go.
Okay, great. The last year has presented its fair share of challenges to most businesses. The consumer market has really been shook up. The COVID consumer of today is ever changing, and your ability to evaluate their propensity to pay is shifting as well. Changes in credit score monitoring, disposable income, and a customer's willingness to spend are just a few moving targets every business is working to confront. With these changes, opportunity can present itself, but we must have the right tools in place to do so. Learning how to attract and retain more patients at every turn is what we help businesses do every day.
One of the things I do here at CareCap Plus is to work with our technology partners and to evaluate a consumer's propensity to pay. And I'm assuming that you would probably expect mostly what we use is credit scores, and we actually choose not to use that as our primary tool to evaluate someone's propensity to pay. We are integrated with the credit bureaus, but our particular business does not report to those credit bureaus, so it has no effect on a consumer's credit score. But in our conversations with our partners, we have learned a lot. Basically, traditional creditors that lean on the FICO score, they're either tightening their reins right now because of the unknown market that we're all in right now, or they're, the consumers are very, very afraid of further affecting their credit profile because of the moving targets. So because of deferred mortgages, deferred student loans. So what we have found is that the credit score is becoming less and less valuable of a tool to evaluate that propensity to pay. Credit scores were not created for the millennials. I don't know if you've ever thought about this, but millennials in general, they rent, they don't buy, they don't own a car, they Uber. They kind of live off the grid. They have their Roku instead of cable. So they're not the pieces of the puzzle that the creditors are using to evaluate their ability to pay. They're kind of not able to do so with that. So which is why some of the new credit scores are being created to try and go after that attempt. So we tried to do it in a little bit more of a clever way. We also see that consumers are not necessarily as credit worthy as our credit scores are. We find that the number one reason that a lot of the other credit cards or finance vehicles are seeing high defaults is because just because someone has a high credit score doesn't necessarily mean that they have money in their bank account. That's one of the great tools that we're able to utilize as part of our platform. And we're also just seeing that people, frankly, don't want to touch their credit profile. So we're able to really accept more consumers without affecting that credit profile, but still use it as a tool, but not a tool that is, the whole entire model is based on. I'll just give you an example. This is a typical CareCap Plus customer with a credit score of 560. came onto our platform last week. I kind of track the highs and the lows, which is why I know about this one. They've been declined by a temporary credit card and by Care Credit. This particular consumer went through our application process, was referred. They were there for a liposuction treatment, $3,500, 12-month payment plan. This consumer had over $50,000 in their bank account. Our technology is able to look at someone's propensity to pay based on their average and their current bank account balance, as well as several other indices. But this is the perfect point of our model. You may be turning away patients that have the ability to pay. Their credit score just doesn't really tell the same story.
Right, and we've seen the market potential for cosmetic and elective procedures. They have boomed during COVID. Our Zoom world, as Betsy alluded to, has increased our vanity and created both physical and financial opportunity to improve our appearances. The financial unknowns of today could present financial changes to your business, but with the right payment options, your business can increase both patient engagement and conversion. Now, Betsy gave you a 560 example of a credit score. Let me give you another example. Believe it or not, over 30% of our cosmetic customers have credit scores of over 800. Now, why aren't they, paying up front? Because what does it tell us? Even if they have the money to pay up front, I'm sure many of them do, they choose not to because of the uncertain environment that is going out there. And a lot of times people don't want to just, write a check or put that much of an amount of thousands of dollars on a credit card. And I'll give you a perfect analogy of this. Look at the auto industry. Okay, when did the auto industry really start to expand? Okay, if you think it was in the late 80s into the 90s when what really became popular? Leasing. And then all the different leasing options happened, from 12 months, 20 months, 24, 36, 40, 50, 60 months. Okay, all of a sudden you could get the car of your dreams and almost custom make your monthly payment so you could afford it and have that car. I mean, think about it. How many people would own cars today if they had to pay for the whole thing up front? We'd have a lot less traffic. And that is the purpose of what CareCap is trying to do. There are a lot of people who want to use your services, but not many want to put that much money up front or on a credit card.
Absolutely. Here at CareCap Plus, we kind of like to consider ourselves, now that we know a lot of you are already offering payment plans, we like to consider ourselves a tool in the toolbox of payment plans, for a better way to say it. Obviously, you can't fix everything in your home with your hammer, right? So you need other options. Same thing, you can't fix and you can't be there for every one of your patients that walks through your door or maybe doesn't walk through your door because of lack of advertising of payment plans. You need to have an option for them to pay so that if they do have an interest in your services, that they do have a way to pay for them. We understand that there are consumers that, for one reason or another, choose not to use financing vehicles. And that's really what we're here for. Because we're purely a business that looks at evaluating someone's propensity to pay, helping them pay for it using automated systems, and then not affecting their credit profile or charging them any interest. So it allows for them, if they don't want to pay for something up front, if they can't pay for something up front, that's a great consumer. That's someone that you need to keep. Payment up front is not necessarily what people are looking for anymore. And even when you go to shop on, I'll use my daughter's example, Abercrombie. She's a big Abercrombie's fan. You can pay for 12 months for your pair of jeans now. This is the way that the consumers are being brainwashed online right now. And that's the way that they're going to expect to pay in your offices as well. So what we try to be is, if someone can't pay in front, if someone does maybe get declined by an alternative financing plan, this is your opportunity to accept that patient and receive payments over the course of a time period, and not turn them away. Because as Jim will explain, the current customer is not just you're not just the value of that customer, we're looking at the value of their return business and their friends and family.
Yeah, and that's a great example of the Abercrombie, but I just want to say something just happened to me yesterday. I was booking a flight on United, and it was $400-something flight, and all of a sudden there was an option to pay $30-something a month for 12 months for the flight. I've never seen anything like that before. So this is what's happening. As Betsy said, this is what the consumer is being groomed to do. And in this chart here, this really explains our purpose again and our passion for CareCap and why we exist. We aim to engage more customers in your services at every part of the customer life cycle. Okay, number one, helping you to attract patients that you never knew existed by advertising favorable payment options. Okay, people that would have never walked in your door without knowing it. Number two, by retaining the customers you have that have walked through your door by giving them payment alternatives and making it easier for them to use your services. And number three, encouraging existing customers. Okay, one of the great successes of CareCap, which again, we never thought of when we were developing the model, was that people in your space are using this as a great upsell tool. If they're getting one procedure and it can be correlated with another, hey, why not do this procedure also? You're not paying for it up front. You're paying for it over X number of months, 12 months, let's say. You're not getting charged a dime of interest or fees. Why don't you do it? And the upsell success has been absolutely incredible. Okay, so the power of this program, there's another industry that we're involved in now that, again, we had no idea did not come from us, but came from really by chance. We're very big in the education business. A CEO who I just happened to meet at a conference of one of the major education franchises all throughout the country asked us, can you help us? And I go, what do you mean? How can we help you? He goes, we have $12 to $14 million of business that walks in the door every year that want to help their children get more educated, and they walk out because they can't qualify for another credit card or in their business, it's called YTS, your tuition solution. They don't qualify, and obviously they can't write a check. And we think that number is double to triple of people that we don't even know who want to walk in our door but won't because they know they can't afford it. We call that the silent killer, because we know in your business and most businesses, there are a lot of people who want to utilize your services but aren't even walking in the door because they know they can't write a check for the amount or they can't afford more debt on a credit card.
Thanks, Jim. I think the most important and my favorite statistic on the slide is that 65% of customer purchases are encouraged by friends and family. If a patient is declined because they aren't able to pay up front, they're not going to have a friend or family member to refer your services to. They're maybe not going to do that favorable Facebook post after, their before and after. So what we tried to do is to actually quantify the cost of losing a customer and the opportunity of keeping them. Let's apply those numbers. We know that a success rate of selling to a customer that you already have is 60 to 70%, while the success rate of selling to a new customer is only 5 to 20%. So obviously that encourages us to retain as many customers as possible. Once they walk through your door, you need to keep them there in order to create the maximum opportunity revenue that they can generate in your office. We also need to look at just one patient as one patient alone is very short-sighted, and the numbers are very clear. If one customer can attract 1.65 new friends or family members, let's just average that, an average treatment of $2,400. That one new customer compounded can result in over $500,000 to your bottom line. That is not something to sneeze at. Sorry, my Midwestern like little idioms. This may sound hard to believe, but this is absolutely true. It's based on fact. And this is what we're seeing with the plastic surgeons that we work with, the med spas that we work with. They're able to really capitalize on maximizing every single customer that walks in and then turn them into an advocate for their business. Okay. Also, this is kind of my soft spot in our business. Cash flow and compassion can coexist. Here at CareCap Plus, we really don't consider ourselves we're a servicer, and we are definitely servicing payment plans on behalf of our customers, but we really also consider ourselves your patient's advocate and a marketing tool. So we're there to meet your 3 goals, but in a way that's the most favorable to your patients. We help you to attract and retain more customers by offering interest and fee-free payment plans. We have an upfront component to our payment plan that helps you cover your variable costs up front. And then we help you to collect fully on those open receivables. And it's done in the most patient-friendly way. And the way that we like to say it is that we treat your patients like valued customers, not debtors. And the way that we do that is very simple. We treat them with respect. Every single CareCap Plus patient or customer that signs up with us receives a phone call, not an automated one, but from a human being. And that human being does several things. They explain that your business paid a servicing fee to offer them a non-predatory interest and fee-free payment plan, and to go spread the word that they basically found a great business that values their business. It also talks to them about their current financial situation. So we're there really as their advocate. We explain the payment plan, payment process, and then we help them to make sure that if they are ever struggling, that we're there to help them. And this is one of the things that I believe leads to our incredibly low default rate that Jim will share with you here in a minute.
Okay, so finally, how does this work? Basically, you, the provider, you get a 30% upfront payment for whatever the amount of the procedure is. 20% comes from the patient, and 10% non-recourse comes from us. Okay, meaning that once we give you the money, no matter what happens, that is yours. And we have found that 30% and 99+% of the procedures covers the basic expense cost of the procedure. Some it may not, maybe stem cells might be an exception, but in general, it covers it. So we want to take as much risk away from you as possible. Then the remaining balance we spread out in our vanilla plan over 12 months. Okay, then and it's all automatic. We've taken several years and to build very sophisticated payment platforms to make everything as seamless as possible. So as Betsy likes to say, it's a set it and forget it. Those payments are automatically taken out of the patient's bank accounts monthly. And there's a backup of a credit card just in case once in a while there's a deficiency, and it has worked out tremendously. So if the patient is paying zero interest or no fees, no interest, how do we get paid? Well, basically there is a 13% we have up there servicing fee. I like to call it an investment. Okay, because what's happening is that, first of all, you, the provider, never gets invoiced. You never send us a check. It comes out of the patient's payments. Okay, and because of that what I consider, again, an investment, you are getting a patient many times who wouldn't have done the service. Okay, and then you're going to keep that patient, because let me tell you, once a patient walks out that door, you lose them probably forever. And you lose their continued visits, and you lose what Betsy just spoke about, all the referral power that comes from one patient. Now, the default rate is less than 1%. I mean, I can't even tell you how amazed I am, especially amidst COVID, especially in the beginning of COVID, March, April, May. We never had one default. And I think the reason is what Betsy mentioned before. We engage them. They know they're getting a great situation here. They know this is a good deal. And also, they're buying in. By putting up that 20%, they're buying in. I always like to have a favorite say, no one washes a rental car. Okay. I mean, you're giving it back. You haven't bought in, but your own car, you'll take care of. Same here. They're buying in. And also they don't want to default because then they'll never be eligible for care cap again. And they know they have a good situation. And lastly, which has also been a driver of business, this has no impact on the patient's credit profile. They're not getting charged interest. There are no fees. Okay, there's no reporting to the credit services whatsoever. When we did this model, when we started, developing the model of this company, Betsy drew the short straw, and she had to apply for care credit to see the process and how it went. Her credit, without even spending a dime, just applying, got dinged 40 points. Okay, just for applying. That does not happen here. And we're very proud of it. As was mentioned before, we don't turn them into debtors. We turn them into partners. Okay, it's a three-way partnership where we're working together to bring you more revenue and to treat the patient more fairly.
Awesome. I also want to add, I'll bring our screens up here again. I also want to add that I know that the default rate's probably a little hard to believe. Definitely wasn't what we expected. We pull payments on the 15th of every month. So going into this business, I expected my busiest days of the month and our team's busiest days of the month to be probably the 15th to the 18th and dealing with the defaults. Our busiest days of the month are between the 12th and the 15th. Because when people are struggling and maybe people need a couple extra days to make a payment, they're actually calling us, texting our customer service team, switching to a credit card versus their bank account. So we're finding that what would have traditionally had become a default, because of the way that we treat your patients and our customers, they're actually proactively mitigating against their own defaults. When we started this business, we did a lot of research on collections and hard collections, which we don't do, like attorney collections. And there's a lot of theory out there that people pay the people that they are nice to them. We've treated these people with respect from the beginning. And to be frank, our lowest credit score is a 503. Some of our customers really, really struggle. And they're not treated with respect a lot. And we actually do that every day, all day. And I believe that's our greatest contributor to our default rate. It's just the common sense of respect. That's about the end of us. Did you want to say a couple more closing statements?
What Betsy just said, we spoke about that from the beginning. I just, being a financial guy, I'm like, yeah, right. Lollipops and butterflies. It's about numbers. It's about our algorithm, which, by the way, is really very good in obviously determining who will pay. But I have to admit, Betsy is right. People, we do treat them properly. Once in a while, there'll be deficiencies of payments that they're calling us before we even find out about it. And when I say deficiency, I mean maybe $50 or this or that, and they're rectifying it before we even know about it. So she's right. That's something we're very proud of, and we're going to continue to do.
What it ends up being is, especially today, I think everyone's offices are a little lighter, a little leaner. I think every medical provider's office is seeing that, and I know the hospitals that we work with have a lot of their patient financial services working from home. So to have those touch points on a monthly basis, we try to look at that as we're like a marketing tool on your behalf. There's a lot of data points that we threw out there. We did provide in the handout the sources behind those data points, so you don't think that we're crazy. We encourage you to get more information about our business and to, again, ask any questions here. Before we open it up for Q&A, take a screenshot of the QR code. It'll take you to our landing page. We would love to meet with you. We would love to answer any of your questions after the fact as well. If you have any questions, we're happy to answer.
I can't hear Jenny.
Oh.
Can you all hear me?
Yeah, okay.
Apologies. No, we do have just a couple questions. And let me look here. We've got 3 short questions. The first was, what percentage of your patients are declined by your payment plan?
That's a great question. It's something that we track very closely. 97% of the patients that apply with CareCap Plus are accepted. The reason that number is so high is we actually have a calculator that's on our provider dash. It allows every medical provider to do like a verbal pre-qualification. So we find that that's really beneficial for a couple of reasons. Number one, we want people when they're coming into our payment plan to have an awesome positive experience from the get-go. But number two, we find with a higher dollar amount procedures that, when a patient walks through your door in that consult, they don't really know how much their procedure is going to cost. It might be a little sticker shock. So we actually have 20% of our patients come back after 6 months, over $5,000. They come back after 6 months. So they're actually using the CareCap Plus payment plan as a budgeting tool. Our referrals don't expire. So those patients, they won't actually go and get declined today. They'll wait until they know that they can make those payments and make good on them, and they'll come back in 6 months. So it's been very helpful. Good question.
Okay. The next one is, are all payment plans 12-month terms?
I'll take that. That 12 months is our vanilla plan. That's where we started the company. But then as we've been progressing to various from different practices, hospitals, even the education thing, some people want it a little less, 8 months, sometimes 6 months. Of course, the less number of months, the higher the monthly payment. So you want to make sure that they can do the monthly payment. And then, some others actually prefer it longer, 18 months, hospitals, some 24 months. They're happy with that. So but basically 12 months has been the sweet spot with the number of the amount of time.
On the elective procedures, our rule of thumb is to try and get that monthly payment to the car payment that your payer would be making. So for some of your payers, it might be a Maserati. For others, it might be a Honda Civic. So we try to, that's our rule of thumb.
Yeah.
Perfect. And the last question that I have here is, what happens if a patient doesn't pay?
Oh, that's obviously a very good question. So our technology is set up to handle that. We also have our people power to handle that as well. Automatic text and email reminders go out 5 business days before the payment is deducted. At that point, they're able to contact us, as we both talked about earlier, and maybe change to a different payment date depending on their pay cycle. They can also switch to a credit card. Now, should on the 15th there be either insufficient funds or a declined credit card, we have authorization as part of their application and their agreement to deduct the alternate. So our system actually generates every 5 days, it switched to the backup payment. 99.9% of our defaults are picked up on the second or the third switch. It's actually 5 business days for a reason, because it would change the day of the week. So it becomes a little bit less predictable to our, as we call them, problem children.
That's great. Okay. Well, that's it. We did not receive any other questions, but that doesn't mean that if you're in attendance today or if you're listening to the recording later on, that you can't ask questions. We are always available. And as you can see here, Jim put his email, and certainly we can put you in touch with Betsy as well. Or as many of you always do, you can email me directly, and I am happy to answer a lot of those questions or connect you directly. One final thing here. You should see at least somewhere on your screen or on your dashboard that there is an offer, and really it's an offer to provide you with more information. So if you do have an interest in learning a little bit more about CareCap or how it compares to some other payment plans or patient financing programs that you might already have in place, you can click on the link there and get more information as a MedResults member or friend of the network. And again, thank you for attending today, Betsy and Jim. We really appreciate you taking the time to share information about the industry and economic trends, and of course about the program that we certainly advocate here at MedResults. And I hope I see you all at the next educational webinar presentation.
Thank you. Thank you, Jamie.
Thank you. Have a great day, everyone.
Thank you.
Great day.
Bye-bye.
Bye-bye.
Bye-bye.